Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, December 3rd, 2021. It is 2:28 p.m. Eastern Time as I'm starting the video. Video number two. Markets are starting to move, so that I usually pick up the frequency of my updates. Here's what I'm going to do: another update on the markets. Can't do enough of those, especially when we have sell signals and one of the biggest drops in months today in the market. So that's another update. I'm also going to go over a few more trade ideas. I'm going to do an update. I threw out corporate bonds, LQD, as a trade idea the other day. I'm going to do an update on that. We hit my price target. And then I also found some futures you could trade, wasn't aware of, for both corporate and high yield, aka junk bonds. So we'll get into that. Semis, I think, are a sector worth noting. Um, I'd like to go over the top maybe 7 or 8 components of the S&P, or no, I'm sorry, of the Nasdaq 100 to give you an idea of where key support levels are, where we're likely to reverse or at least bounce. And then last but not least, I know it sounds like a lot, but I should whip through here within 30 minutes or less. I'm going to go over, I'd like to keep balance on the site. And sometimes, and quite often, my views on a security, whether it's a commodity, the stock market, an individual stock, are going to be different from yours. So my job is to provide analysis. Your job is to decide what trades to take, which ones to pass on. So I have a little short list here of about half a dozen of the what I think to be the best looking bounce candidates or long candidates in the Nasdaq 100. So I'm going to go over those as well. I'll tell you, and that'll be towards the end of the video. That'll be PayPal, Comcast, Facebook, Adobe, T-Mobile, JD, and Booking.com, BKNG. Alrighty, so let's dive into the charts. So today we hit T1, and I got a post out to you as soon as I could, telling you that, whereas normally I expect a reaction on the initial tag of my targets, I shared my thoughts and said I think we'd probably go down on through there. Why? Was that, my guess? And so far it's proved to be the case. Well, remember, this is a bear flag, bearish pennant pattern. The nature of that is you have a move out of the flagpole, which is typically mirrors the move down. It's impulsive, pretty much unidirectional, and the target's not been met yet. I have that measured targets roughly between T2 and T3. So that and everything else, the impulsive rejection led me to believe that any reaction there would be minor, if any, and so whatever. My suggestion was to sit tight, and so far so good. We're consolidating right now a little bit, but not much. I still think we'll head down, hit that T2, T3. Now let me show you some levels, because we can always bounce at any time, but let me show you key levels to watch. So again, we're living here in the world with a 60-minute chart, or looking at it right here. You're also looking at it here with that head and shoulders pattern I had, showing you move down to 370, 376. But on the more significant daily chart, let's not forget, and T1 was aligned with this previous reaction high. That it's a major high. That was an all-time high, and then we had a correction off there in the Nasdaq 100. Traders, watch this. Everybody that uses charting, and even those that aren't, that into technical analysis, know to look for reaction highs. So right now, all we have, and again, this is not my preferred scenario, but it's one that is certainly recognized, and I will guarantee you there are many, many, many traders out there that are looking at it this way, that see things different from me. They see a breakout and a back test. So let me just say it and be clear. That is an objective long entry. If you miss the breakout or you want to add to long positions, you either go long on a breakout to new highs, or you go long on a back test of that level. Now, with that being said, I'm sure they'll step in and buy, but what I think will happen, they'll be wrong. And I think we're going to come on down and fail the breakout and come on down to at least that trend line. So to keep it very simple, if you're looking for, you're swinging it down, you're looking for more downside, I think we have another, it's not much, but it's about another 2.5% lower till we hit that trend line. And then you have that 373.14 level there. Okay, now, with everything that I've covered the last few days and really last few months, the extreme sentiment, bullish sentiment, extreme divergences, overbought conditions, skew index up there, the potential, as I've been talking about, for a very powerful and swift drop. It's a whole lot higher now than at any point in months when I've been talking about, and I try to identify these pullbacks. Again, that's all in yesterday's video and the other one. So all I'm trying to say is we could don't don't think that we can't just smash right on through those levels like they're not even there. And if we do get that kind of panic meltdown selling, and what happens is, this it's a top heavy market right now, top heavy in long trades, hedge funds, mutual funds. The hedge funds and the pension plans are trying to play catch up, so they've taken extra risk. And when they unwind positions, when there's a crowded rush for the exits, don't underestimate how far and fast the market can fall. So if that happens, I think we're going to come down to, give or take, this is a range here, about 335.50 or so to about 342.50 right there. So there's your potential, if things get really ugly next week, target. So, if you want to, if you got in short in the last week or so, we've had multiple short entries, objective short entries, and you want to swing for the fences, you could hold out for that. Otherwise, we'll probably get reactions on these levels. And look, this, again, let's just start with where we're at now. This move past T1 may be a momentum fueled overshoot. We could snap back on there because, again, remember, that's that previous reaction high. And so far, we're just a hair below it, but there's plenty of time left in the trading day, 3.5 hours to go. So anything can and will happen before the close. So those are your levels. If you're happy with what you got, you want to book profits, great. You want to trail lower stops to protect some profits, but leave the door open for more downside, great. You want to reverse and go long here, great. Nothing wrong with that. If you're bullish and you think we're going to new highs or beyond, or even just a bounce trade, do that. Just don't get married to any of those scenarios, because if we do have that meltdown, you go long here, you're going to get smoked. And if you stay short and all of a sudden they buy it up and defend 382.80 and they start buying off that, then we have had a successful back test of a breakout. All right, and then what we'll do is we'll take these divergence lines, and a few weeks or a few months from now, I'll be talking about this marginal new high, which, if it still has negative divergence intact, that'll be the next short setup up there. Okay, I know it's a lot of scenarios, but again, if I sit there and tell you the market's going to do only one thing and I'm certain of it, run. Don't walk away. Run from whoever tells you that. Nobody knows. Markets are dynamic. They change. The technicals change. And remember, the primary trend's still bullish. We've got some decent sell signals so far, and we might have the weekly sell signal if we close down today. But if we rally back hard into the close today, it's going to put that weekly bearish engulfing candle from last week as a questionable sell signal. It's not going to give me a solid sell signal. So that's that. And although the Qs are one of my favorite trading vehicles, the S&P 500 is more of the stock market, and you can see it is simply doing the same thing. It is back testing the previous all-time high right there, back testing the breakout of that level, and that's all it is at this point until we move solidly below there, and especially print a solid daily close below. Right now we're close enough to say we're still back testing. You can see we're at 452.30, whatever. It's right at that level, and there's also an uptrend line that comes off the lows right there. We're just a hair below. So if we hold it, great for the bulls, but not necessarily meaning we're going to new highs. They could park it up here. They have to really start moving it up away and closer to that previous high to really start increasing the odds of that scenario. If we break, here's targets for SPY. 435.63 roughly, then 424.45. Those are some near-term targets. Let's take it one step at a time. We'll see if that even those start to come into play. I'll let you know. Oh, and also don't forget the I haven't talked about them much lately, the 200-day exponential and simple moving averages. That's these blue and red lines. If you can't see them in the video, they come in together right here. This is the both 200 days. I use both because some traders like the simple and some like the exponential. Therefore, I'm going to watch them both, and they come in together, so it's kind of moot, by the way. So that's a magnet. You get the percentage trading above the 200-day moving average. When you get too far away from it, that often, as it did right here, you hit the 200 exponential, or almost, you hit it here. You tend to come back and test that level. Those are key support and resistance levels, and we also broke back above them right here after the big correction when we dropped. So you can see that's when we took it out. That was a major sell signal. You had the 200s taken out, and then you regained them there, and that was bullish. And since then, they've acted as support, and it's been a while since we've tested those. So That's another reason I think we'll come down a little bit more and at least test the 200s, and that would bring us into about 424.45, which is approximately a drop of another 6.5% on the S&P 500. Want to play the glass half full, optimist scenario. We'll say the PPO right here is back testing the zero line. That often acts as a trend indicator, bullish when above, bearish when below, and so that trend indicator is still bullish for now. Okay, I'm going to do this quick. I'm going to rifle through a handful, maybe the top 8 or so, 8, 9, 10 holdings in the Nasdaq 100. Many of these are also top holdings in the S&P 500. So here you have Apple. Nothing damaging on the daily chart. Big divergences, building, building, building. They've been building for many months, and it's not like they don't work. We had corrections. You had a divergent high there, correction. That was our last divergent high correction, but this is just simply an extension of the divergences that have been building since all the way back in last fall. So for about a year now. And again, those are going to show a lot better on the weekly chart when you see long divergences that are building for a year or more, and they also have longer term bearish implications when they finally play out. But right now, nothing big on the daily chart. We want to watch this one. 60-minute chart. I have a trend line here. We pierced it and gained it back recently. We're right on it, so we're on the trend line, but we also have negative divergence. So this says whether we bounce or not first, probably got a correction coming up in Apple, more downside to come after that divergent high. That could be all you get out of it, but that's a pretty big 60-minute divergent high. Microsoft, Mr. Softy, broke support today. Pretty good support here, 329.33. Why? Because they had all these reactions. Look how many candles were there for the last month or so, and then boom, a solid break. That is a sell signal all day long on the one of only $2.2+ trillion companies. Apple's 2.7 trillion. Microsoft lost some value today, obviously down 2.5%, but it's still a $2.5 trillion company, and that's definitely waiting on the indexes today. It's right at its 50-day moving average, but I don't really have support until down here. You have a gap right here. So yeah, okay, let's say that we do have gap support right there. Traders like these gaps, but that's still below. And then the bottom of the gap is right here. But I think we'll take it back here to 305.90. I'll color up that level now, and we'll talk about it later. 305.90 would be where I think Microsoft's going to go at minimum before all said and done, even counter trend rallies and bounces aside. And if it does bounce, well, 329.33 is resistance, so that could give you another short entry. Alrighty, let's see on the 60-minute chart. That was a daily. Here's your levels. You can screenshot it. I'm not going to spend too much time, or the video will go forever. Alphabet, GOG, Class A shares. There's a little minor trend line it's flirting with. We're already on a sell signal on this one and have been for a while here. This is a trend line off the March lows right there. Beautiful uptrend line, broke there, and we've been back testing. We're starting to roll over. That's a lot of levels on this chart, but the first one I have is 26.74. That's what it looked like on the daily. 60-minute charts back testing this downtrend line. A little bit busy chart. A lot of levels. Amazon's been doing its thing for a while, slogging around in a slightly upward but mostly sideways trading range right there. Price channel probably come down and visit the bottom of the channel right here would be my guess, and that's another at least 3.5% down. Let's see, next up, Tesla. Tesla fired a sell signal today on a break of this uptrend line. This is a daily chart. It's got a little bit of support right here, and then it'll probably come on down here to about 802. Here's what it looks like on the 60-minute chart. Broke that minor trend line. Here's a secondary trend line that should come into play right here. And so with Tesla, you're looking at probably another 6.8, almost 7% downside there. Facebook, one of the better looking candidates. In fact, did I add that? Yeah, I did. I mentioned that as a potential long. Why? Well, Facebook has pretty good support right about here, and you're setting up some nice bullish divergence. In fact, I mentioned this divergent low here for a bounce trade in Facebook. You had divergence then, and it's only gotten bigger now. So 297 roughly is that support. So it's pretty big support right here. Again, it's the top of this multi-month sideways trading range. You just extend that out. So look, things melt down, it can just fall right back down into there, and they could come back down to the bottom of the range. So again, don't fall in love. I'm sharing this for those of you that are looking for long trade ideas. Nvidia, the semiconductor sector as a whole is looking mighty frothy, and a lot of stocks with divergences. And recently on sell signals broke minor trendline support. Nvidia also looks to be headed lower to me based on this 60-minute wedge. Divergent high trendline break right there. So here's your recent sell signal. Here's some of the levels where I think it's going. Look like this, something like that. Next up, that's the other share class, Alphabet, GOG. This chart's a little cleaner. You can see it's on support right now. If it breaks that support, probably come down here to about 2,700. Let's see, daily chart looks similar to the other share class I showed you. ASML, big semiconductor divergent high right here, and like a lot of these guys have already, a lot of these have already broken down. They're on sell signals. The market doesn't know it yet, but I think the semis are already topped. And have more downside to come. This one's coming up on support now, but I think it'll work its way down here to at least that 609 level, and that'd be a pretty good size drop. There are quite a few different semiconductor inverse short ETFs out there. Adobe, like so many, this is a daily chart here, put in a big divergent high right there, and it played out for a big correction, big drop. But what it did then, and it's done since, set up this trend line. After that drop, it pushed up, made a marginal new high, a lot like the stock market. I told you we had sell signals back here. That's fine. Sometimes you never exceed that. Sometimes you make a slight marginal new high, and as long as the divergences are still intact and only bigger, then I expect a bigger drop, and that's the case with Adobe. However, you can, if you're a bull, you can buy it right now at uptrend line support and price support right there, about what is that? 613.44. And you know, with a stop somewhat below. At best, I think it's good from one more, you know, maybe another thrust up, and ultimately I do think it'll break this trend line. So you can set a stop below that trend line, let it run, or look for a short entry on a break of that trend line. And then I think Adobe will come down. I think it'll blow past that previous reaction low and fall all the way back down to about 526 and change. That'd be a nice hefty drop. Remember, this is one of the top components of the Qs, about 13% downside. Netflix was a nice short. I believe I highlighted a few weeks back. We had this multi-year or at least year-long sideways trading range. Boom, 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 playing ping pong, and finally broke out right here. So that's a breakout, right? Bullish back test, right? Just like the S&P is doing in QQQ today, and that's what bulls like to see. If you miss a breakout or you only did a partial position, add to it on the back test with a stop below, and it worked. And it was a good rally, the money to be made. However, it's done. It's run its course, broke the trend line right there, put in a divergent high, and it's been selling off impulsively. And here's an example where, you know, I might have pointed out the other day, I didn't, but at 616.66, if you were bullish, you could have stepped in there. That was pretty good support, but we consolidated for about a day or two there, and then broke it today. And so I think we're headed back down to test the top of that range, about 575 or so, before all said and done. That's it. Costco finally cracked. Costco's been a, you know, just a great stock lately, but put in this nice bearish rising wedge, just like this one, no different. And just like that one, you got a sell signal there and dropped, kick back rally, and then you fell. Here, I think we're going lower. And that's it for the top ones. While I'm on stocks, let me cover some of the others in there that I mentioned for you looking for long trade ideas that are starting to set up. PayPal, very oversold, coming up on really nice support right here, about 174.27, close to it now, so you can buy it here or a little lower with a stop somewhat below. Just don't fall in love. We don't have divergence. You do have the PPO starting to curl up, and again, you're overbought. You could bounce it back to right about there. Let me give you that target. There's some reactions, 201.51. Other than that, keep in mind the big picture. A lot of these stocks may have put in significant tops, so, you know, bulls are in buy the dip mode. This dip is a little bit bigger, you can see, than the other ones. And then like so many of these stocks, don't forget, you go to the weekly chart, and I see more downside whether it bounces first or not. PayPal is probably coming back to this long-term uptrend line, and that's quite a bit lower. So trade it as you like. Again, coming up on support, so you can make a case for it if you're bullish. What else? Comcast, CMCSA. Comcast, looking good. Well, it'd look better if it gets down here. 47.20 would be nice, but there is some support here. I had a line at 48.44, minor support. This is 47.20's bigger support. You got a bullish falling wedge pattern here, and you've already kicked back to resistance. So what I think it'll do, work its way down in this wedge. I think this wedge will continue to develop, and then if you can buy it around there, maybe start buying it around 48 down to about 47 or so, with a stop somewhat below, and or a breakout above the falling wedge pattern. So again, if it continues to develop like this, boom, you buy a half position there, another half on the breakout. You can swing it back up. If you can swing it from 47 up to 47 and change up to 52, you get about a 9% return. And if it breaks out of the wedge, that's going to be longer term bullish. That's probably not going to happen if the market's put in a significant top, but that there's not enough evidence to say that right now. There's enough evidence to say that may happen, but we don't have enough, longer term sell signals and trend indicators rolling over yet. So there's one for you. Another one would be, I already covered Facebook. I think I already covered Adobe, didn't I? Yeah, I think that was in the top 10. Yes, I did. T-Mobile. That one's looking nice. In fact, I noticed it the other day here at 107.86, nice support. Almost threw it out there, but I had my concerns about the market. But as again, I need to remind myself from time to time, regardless of what I think is going to happen, I need to get ideas out to you guys long and short. Had a nice, beautiful uptrend line there, big divergent high, broke. And this one, has dropped 28% right there, and it dropped to a very good support level right there. Big old gap right here. You had a major reaction lows along there. 107.86, just hit it the other day. So now you can either buy it down to, but not much below 107 with a stop below, or look at this, on a breakout of this nice clean downtrend line right here. Breakout of that trend line would run us up. I need to give you additional targets somewhere. Probably shoot up. I'd say at least, well, that's too shallow a target. That'd really be the first resistance level, and then you have some reactions around here. I'd say something like that, maybe work our way up. But again, it's a big divergence on the daily chart, so this one could run up easily up to about 123. Maybe no, let's put that higher. Let's put that line here at about 124.50. Let's just say that's a potential swing target if it can break out of that trend line. And the market's not in meltdown mode. Next up, JD. Not yet, but maybe on a pullback to this trend line. Again, if you are looking for long trade ideas, wash, rinse, repeat. It doesn't get any easier than buying pullbacks to support in a bull trend. And so you can buy this pullbacks to this trend line, and we could go. Now, it could also break. You have a potential divergence forming here. If I can grab a line tool, show you divergence. So if this breaks, we're going to come down here to 59.18, at least in my opinion. All right, last one, BKNG. It's booking.com or Booking Holdings. The parent company for Booking.com, I believe. Nice support right here. I mean, look at all these reactions for quite a while. A lot of reactions around that level, including recent reactions, and right here and here and here. Just hit it the other day. But you also have, a lot of buts on these. We're coming off a big divergent high, and there could be more downside to come. But all I can tell you can buy support. If you're looking for long trade ideas, what would you target? Well, got a big old gap right here. You can target the bottom and or top of that gap. And then 23.72 is resistance. Or if you believe we're in some Super Bowl with a lot more life left in it, buy support and just tuck it away with stop somewhat below and let it run. Okay, just before I went on vacation, in one of the videos I mentioned LQD as a trade idea, and I believe it was right here, right around that 131-ish, 131.72 support level, with a target right here of 134 right there. And what happened, we bounced from there, came back, we had a one-day whipsaw, just a marginal new low, and all that did is extended the bullish divergence that was already in place. So you have a divergent low, and you've had a pretty strong rally, but right into resistance. I gave you two targets. That 134 was my minimum target, and that has been hit. So what I think is going to happen, market's fallen today. These are corporate bonds. Market should start pricing risk. They're flocking to them right now. For whatever reason, but again, it's technicals, and we're right there. Look at that, 134.07 as I'm doing the video. I had the level at 134.09, close enough for government work, so that's been hit. During this, when I highlighted that recently, I said, look, you really got to leverage up a lot because it's not a big gain potential on that. I told you it was only a couple percentage points. It wasn't a huge trade, the minimum target that is, about not even 2%, a little more if you get up there. But and it's worth your while. I call it beta adjusted position size. You don't have a lot of risk in bonds, so if you normally trade, let's say 10,000 per security, you could put in 50,000 in a corporate bond fund because it's not going to drop 20% or 15% in a day, and that makes it worth your while to get just 2%. Now, with that being said, I found this today. I figured they probably had futures, and they do it. So I did a search, and sure enough, what was this? CBOE has futures for both junk bonds, high yield, aka junk bonds, IBHY. It's a junk. They're futures on the high yield corporate bond index. So basically, like your JNK or what was it? JNK and what's the other one? HYG are your two big junk bond funds, and then corporate bonds. Tracks similar to LQD. May not be the exact same corporate bond index. Yes, it is actually. LQD tracks the iShares iBox investment grade corporate bond index. So this basically is a futures contract to trade LQD. Simple stuff, right? On Interactive Brokers, the symbol is here. You have it down here. IBXX IBHY. Let me make sure I did that right. No, the corporate's IBXX IBIG, and that's what you need to enter on Interactive Brokers to get the short or go long or short. I'm going to say this: they're thinly traded. I took a shot at it today, shorting this one. It took a while to get a fill. If you trade it, use Interactive Brokers or whatever broker you use. I like to use those IB algo trades, but I had to set it to urgent because when it was on normal, if you don't know what that is, it's they'll fish it out. You set your limit price, but then they'll fish out using algorithmic programs to try to get you the best fill. But when it's very liquid, sometimes you're not going to fill, and you have to then change your order. Order price, and it'll try to fill you better than what your order price is, your limit price. Again, that's going to be your worst case fill if it fills. And same thing here if you want to trade junk bonds. Junk bonds are also moving down. I noticed credit spreads ticking up lately, which is also a red flag or a yellow flag for the market. So there it is, guys. Trade ideas, corporate bonds, like I said, the semis. Let me wrap the video up because we're still under my 30-minute goal here. There's a lot of different semi ETFs. SOXX is one. I can't make a screaming case yet to short the semis, but I'm going to be watching those, and quite a few individual semis have started to break already, have broken down, and those that haven't look like they could correct. So today is really starting to see what I've been wanting to see. Tech. I always say this: the market cannot and will not break. I'm talking a good solid break, good correction without tech breaking. Tech's been holding up. That was the whole point of my video the other day, how those market leading FANG stocks were holding up, lifting up the indexes, giving the stock market a guise of doing very well, where if all you have to do is look at market breadth, and you can see the majority of stocks were moving lower, trading below their 50-day moving averages, below their 200-day moving averages. And so finally, when tech breaks, that's when the rest of the market breaks. Now, look, this isn't a bloodbath in tech. It's nothing major, but like everything else, SPY, QQQ, we did recently put in bearish engulfing candlesticks, and we've been moving lower since, stepping lower since. So that makes that, or it gives it the potential to be a major topping stick. Remember, bearish engulfing aren't for short-term swing trades. They tend to mark major inflection points. So if tech continues to move lower, then it'll most likely take the entire stock market down with it due to its heavy weighting, over 50% in the Nasdaq 100. And last I checked, at least a quarter, if not over a quarter, of the S&P 500 was weighted in technology stocks. All right, that's it, guys. Let me get the video out to you, and again, I'll do an end-of-day wrap, especially if anything changes. This has been Randy Finney with Right Side of the Chart. Have a great day.